Welcome to the B.F. Anderson Technical Report for October the 14th. When you look at macroeconomics, we've talked a lot about demographics as a major macroeconomic issue. Interest rates are very important. Corporate earnings are very important. So the uncertainty caused by the jobs report last week was interesting, and I think the only way you can really analyze it is to look at what happened to interest rates once the jobs report was announced. There was a major spike in the 30-year bond. This is the 30-year bond. So it looks inflationary. We're not sure yet, but we have to keep an eye on what the Federal Reserve is doing, and they're going to start tapering in November. Okay, the market continues somewhat in a downtrend. It is somewhat of a short-term downtrend, and I'll show you that in just a minute. But you can see here that the NASDAQ peaked, around September the 2nd. That week has been pretty much in a downtrend, broke here, violated here, and has continued to stay in a downtrend. And one way to look at a short-term downtrend is that if you look at the graph and say, okay, what was the last major event? Well, it was the low. So until it makes a higher high, this continues to stay in a short-term downtrend. So this just basically means you need to be careful with your portfolio right now. You need to really analyze the companies that you're looking at. And what I'm doing, just to be on the safe side, I'm doing half positions instead of full positions. Now, the reason for that is quite simple. We're still in a very long-term picture here. Looks very positive. This is the 35-week moving average. The NASDAQ came down and pretty much kissed it and then rallied off of it. But I'm just simply saying that the market is looking a little toppy here. I don't know if we're going to pull back more or not, but we are in a correction. There's no doubt about it. Now, the other indexes we're looking at, now remember, we look at 5 indexes. You want to get a total picture here. The mid caps, they're going sideways. It's just going sideways. Here on the New York Composite, pretty much same thing, just sideways market. Here is the small caps. Basically sideways. So on the short-term basis, the NASDAQ's in a downtrend, and all these particular indexes are moving sideways. Now here's the S&P 500. Again, like the NASDAQ, peaked around September the 2nd, pretty much in a downtrend. The last major event was it made a low. It needs to make a higher high. So the S&P on a short-term basis is in a correction and a downtrend. However, again, I'll point out that we're above the 35-week moving average. So overall, the picture is positive. You just need to be careful here. Now on the aggression index, now remember what we're doing here is we're comparing technology stocks to, say, toothpaste stocks. So when this line is going up, it's just telling you that people are willing to go after growth stocks versus consumer staples. We pulled back. We've been kind of moving sideways ever since. We're very close to possibly breaking this moving average. Again, this just continues to confirm that we need to be careful. Now, the 3 economic indicators, interest rates did pop up a little bit right after the jobs report, has pulled back somewhat on the 10-year. Oil prices continue in an uptrend, which is somewhat inflationary. And then here you have the financial stocks, which are just basically moving sideways. Now, on new lows, again, this is another warning. I mean, this is the leaking boat indicator. When we get above 40 a day for an extended period of time, it's just kind of telling you that, the boat's kind of leaking here. Just be careful. Now, on the inverted yield curve, no inversion. But, you might want to notice something about this particular indicator. When it's going down like this, that kind of indicates maybe deflation. And then when it's going up, inflation. I don't know. I just feel like the main reason for the indicator is that if we do invert, chances of a recession and a bear market are pretty high. But right now we're not inverting, and it's kind of like we're seeing somewhat of an inflationary cycle here. Sentiment is still looking, better, much better. In fact, it's probably the most positive it's been in a long time. This is that AAII bull-bear ratio. When it gets down in the negative area here, it's just telling you there's more bears than bulls, and that's good. That's what you want. However, on the put-call ratio, we continue to stay in greed, just not really budging. I continue to keep an eye on it. Now, on the Russell 2000 Growth ETF, you can continue to see here growth stocks basically peaked in February, and we've been moving pretty much sideways ever since. Really would like to see a breakout up here because you can see here, again, the last major event was it made a new low. but then it's making a higher low, and this is pretty much about the same. It would be really nice if we could see it up here. Now on the junk bond ratio, this is where I'm comparing in a ratio junk bonds to treasury bonds. So when people are very nervous about the economy, they worry about defaults on junk bonds, whereas they don't worry about defaults on the treasury bond because the government can just print more money. Now you can see here we somewhat rallied out of here, but really since the jobs report we have somewhat pulled back. On the volatility index, continues to stay very constructive. I've got a rate of change down here that's pretty much normalized. Also, we're just not seeing a lot of volatility in the market. It's been very steady. Now, I want to go back to demographics. These are the spenders. This is what we've got to figure out here. These guys, these young people spend money. Old people don't spend money. So the numbers are like this. The consumption years really get started around age 35 and then they peak at age 54. So the majority of the population right now is millennials. They're the largest segment, and these guys are going to consume. They're going to buy things. And so when you have an elderly population such as Japan, your economy kind of comes to a screeching halt because no one's doing anything. But anyway, I just continue to point this out. It's very important. Now, to kind of on that same theme, let's go back and look at where the baby boomers on a demographic basis hit 54. Well, they hit 54 right here. And it was the beginning of a really long-term bear market. So basically, though, you can see here, and I think this is interesting, in the early stages of this 1995 to 2000 rally, you can see how nice the spread was between the 10, now this is a monthly graph, by the way. This is being plotted monthly. So the 10-month moving average, you can kind of see a nice, steady, uptrend, a lot of space in there. But then, we did see a pullback in here, but then we started going again. So let's look at where we are right now, because I think it's very interesting. Here's where we are right now. This is the pandemic back here. We lifted off, but you can see here we got a lot of nice space in here. There's not a lot of problems. So, we don't want to get too negative here. I mean, we're seeing the beginning of the sweet spot for the demographics, because the millennials turned 35 on average in 2016. So I'm just saying that, we could be looking at a very long-term bull market. And so on a monthly graph basis, things really just don't look very bad. Now on the top five, let's just kind of get to these real quick. This is Upstart Holdings. It's a financial company that pretty much caters to the millennials. You can see here we've kind of got a little bit of a cup formation here, and it's breaking out above that 10-day moving average. I would like to see volume pick up a little bit before I were to get interested. We do not own this stock. Skin, which is the beauty health company, again, kind of moving sideways, still making top five, but I'm not seeing any kind of volume signature, so I would leave this one alone. And again, this is not a buy list. I know it's taken that way, but it's really more of a way for us to learn a little bit about reading charts, because you got to learn technical analysis. It's just a critical component of analyzing companies and their stocks. Now here's Cloudflare. This is a very interesting company, primarily in internet security. It came through this 50-day moving average, broke out above it on really, and so we've got what we call here is a volume cluster. What we're trying to determine is, are the buyers in control or are the sellers in control? So right now, as of this day, and the stock's hitting all-time new high, Cloudflare, which we do own, is the buyers are in control. Now, Asana, this is another software company, cloud-based software company. You can see yesterday, last couple of days, we've been getting some upticks in volume here. Tells you that the buyers are coming in. You've got somewhat of a cup formation here with pretty much a little bit of a handle if you're a William O'Neill guy. And then you can break out above the handle. I think that's a very constructive pattern. We do own the stock. Avis Budget Group, car rentals, continues to be in a very powerful uptrend. We are getting some volume signatures along with it. It's a little too hot for me right now, but if it were to consolidate a little bit and settle down, I think I might be interested. I'm going to keep an eye on it. So that's basically it. If you have any questions, please give me a call. Thank you very much.